Interesting. Oh, sorry. Sorry. Hi, Beth. You're muted.
I'm unmuted now.
Better, easier to hear if I have my headset on. Just talking on the email. We had Diane, but I'm not sure what happened. Hi, Mary.
Hello, how are you?
Good. How you doing? Thanks for
Good, thank
joining us
you.
tonight.
Thanks, of
Here comes
course.
Charlie.
Holly's
Now, do you be able to screen share? Or, I mean, we had the handout. I didn't know if you were planning on doing anything on screen.
Oh, okay. Sorry. Were you asking me about screen sharing?
Yes. Were you planning
I'm
on?
sorry.
That's okay. I mean, I'm just asking so I can make sure that you can, have the capability to do so.
Right. I don't think we were going to unless you
Okay.
needed us to.
No, that's fine.
Okay. Paula's logging in now. She was having
Okay.
some technical difficulties.
So Charlie, I made you the co-host, but this is just automatically recording to the cloud, so
Okay,
you don't need to worry about starting
all right, great. I
recording.
appreciate that.
Okay.
How is everyone? Hi, Mary.
Hi, how are you, Charlie?
Very good, thanks.
Hi,
We're doing
Charlie.
well
Hi, Beth. Hi, Diane.
I
And Bob.
connected this month. Yay!
here. We're all should be experts soon with Zoom and virtual stuff,
Yes, we will.
sadly.
Hi, Diane. How you doing? Hi, Judy.
Everything at the library.
Do I do continue?
Very busy.
Very busy.
Yeah.
Are you able to be open and people are to cope? with
Yes.
it?
Yeah, we've been open since the last week of August.
Okay.
Limited numbers and with all the
Right.
COVID restrictions.
We need places to go.
Yeah.
But it never does.
Diane has what say?
Ron.
Hello, everybody.
Hi.
Hi,
Judy,
Judy.
you glad you retired when you did?
I certainly am. Perfect timing.
I was gonna ask her if she was retired. Glad.
That you, Toby?
It certainly is. How are you, Joe?
How you doing?
I'm doing well, thank you.
Good. School going okay?
I don't know.
It's going.
Say hello to me or anything.
Just to let you know,
Oof, no.
my son, he to school is tonight at 7. So I'm gonna take off at 7 to go to his virtual parents' night.
Okay, understood.
Thank you.
Need to silence me. Toby, I'm having trouble hearing you.
Hmm.
I have trouble with Zoom.
Yeah, I think it might have been Toby's connection, not yours, Judy, because you're clear.
What are you doing?
I'm
Really
having some problems with people freezing and voice getting cut out, but I'll catch what I can.
I think with voice canceling software, it's really important to be close to your microphone when you speak.
So, I don't know what you did. Download and run Zoom. You cannot. Browser.
We see you, Eileen and Ron. We can see you. Can you see us?
No.
Do you see up in the right-hand corner, do you see a little thing that says view? A little box that says view?
No.
I wanted to see what the choices were. I might get to be- I'm gonna wait till after this. Oh, we might be late.
What is this?
Mary, are you flying solo tonight or is Paula going to join us?
I think Paula is joining us, Charlie. Let me just, I know she is.
Okay.
I don't think she is, but she was having some problems.
Allow. We should.
I know, I'm trying to get it.
All right, there we go.
Hello, Ron.
Hi, Linda.
Can you hear me?
Yep.
Okay.
You don't see her joining, Christine?
No, I don't see anybody in the waiting room.
Huh.
Wait, here comes Paula right now as we speak.
And Tricia is expected to be there, correct?
Yes. And Mahesh as well, unless he reached out to you.
Mahesh said he might not make it. He's
Okay.
traveling, but we'll hope for the best. I have his paperwork if he doesn't make it.
And everybody did get a copy. You were able to send out a copy of the meeting presentation to everybody? Great,
Yes.
thank you.
Mhm.
Okay, here comes Paula.
Perfect.
Hey,
How are you?
good. How are you, Paula?
Good.
Good. All right. The one I don't see is Tricia Svensson. I guess in lieu of taking minutes, at least for the time being, we have a recording we can go back to. So I don't think we have to appoint somebody to take notes. Would you agree, Chris?
Myself. Sorry, I had just muted myself. Yeah, that should be fine. I was just double checking email to see if she had reached out, but I don't see anything
Okay.
from her.
Well, the appointed hour has come, so I think we'll call the meeting to order. As always, I have to read the disclaimer here. So pursuant to Governor Baker's March 12th, 2020 order, this meeting of the Attleboro Board of Library Trustees is being conducted via remote participation. No person in attendance of or members of the public will be, no in-person attendance of members of the public will be possible. But every effort is being made to ensure that the public can adequately access the virtual proceedings as provided for in Governor Baker's order. A reminder that persons who would like to listen or view this meeting while in progress may do so by accessing the online link, which was provided in the meeting notice, and that notice was duly posted. We will post a recording of this meeting on the city's website as soon as we are able. So that is that piece of business. We are going to have to take all votes by roll call, as is prescribed for this process. And I'm going to announce the names of the board members who are present and participating tonight. We have Eileen Strominski, trustee, Linda Binns, trustee, Diane Mangiarotti, trustee, Beth Gould, trustee, Toby Reed, trustee, and Judy Lusk, trustee, and myself, Charles Oliver. Let's see, what else do we have to do? Kindly mute yourselves when you're not speaking, and kindly unmute when we are voting, or if you would like to speak. There's Tricia. Okay, great, Tricia. We are all present and accounted for, except for Mahesh. Tonight, we have a presentation by Rockland Trust, and we put that at the top of the agenda. So I will turn the meeting over to Paula and/or Mary. Take it away.
Does anybody have anything for us before we look at their presentation? All right. And I know it is a little bit different because of the muting. So if you do have a question, feel free to interrupt me. Feel free to use the chat or the little raise hand or any way at all. And I'll try to pause to make sure that there's no questions as we go along. And I think I heard Mary from the office next to me ask if everybody had the presentation, and we were all good with that. Excellent. So if we look at it's actually page 2 after the cover page, we can see what the market has looked like in 2020. And I think I would best describe it as kind of the year of the bull and the bear and the bull again. So we started out the year in our continuation of our 11-year-long bull market, at which point in time on February 19th, we saw almost a 34% sell-off in the market, which you can see on this slide. So we were technically in bear market territory. Anything over a 20% correction is considered a bear market. And then we were up about 54%, so a bull market. And then in September, over on the right, you can see we were down about 10%, which is technically a correction. So certainly a very, very volatile year. And the stocks within the market on the next page have also been very volatile. So if you look at the 500 stocks in the S&P 500, the largest 5 stocks, which are Google, Microsoft, Amazon, Facebook, and Apple, those 5 stocks averaged year-to-date performance of 42%. The other 495 stocks are actually down almost 2% on average. So there has been a pretty big disconnect between names within the market itself. So it's really kind of been a tale of two markets. Obviously, this was all predicated upon page 4, which is the COVID-19 kind of shutdown. This chart shows you here as of the end of September where we were with COVID-19 cases. The blue line shows you the 7-day moving average of confirmed cases, which have been hovering right around 43,000 per day.
Paula, can I stop you for a minute?
Sure.
Let's see if we can share screen here. I've got your report up. Maybe I can share it. Okay. Can everybody see that?
Mhm. Yes.
I'll make a full screen of it. Okay, so tell me what page you were on again, Paul.
Perfect. Just one more ahead is perfect, Charlie. Thank you. Yep, right there. Perfect. Perfect. So we can see on this chart, like I said, the blue line, and the blue line, the key to the blue line is actually all the way over to the left. So that's where you see like the 43,000 number, which is the daily cases, versus the darker line, which are the fatalities, which has come down from about 2,000 a day to 700 per day, where we are now versus the peak of that in May and the peak of the cases in August. So obviously this has really been what's driving all of the economic activity, was this shutdown and the desire for people not to catch the virus. So if you look on the next page where we look at economic activity, the hope was here that in March, when things shut down, that we would see what's referred to as a V-shaped recovery, so that we would be down and then we would go right back up when things opened. So this chart kind of tells a couple of different stories, which is some economic activity. We did see a V-shaped recovery. So those top 2 lines, which are housing and debit and credit card transactions, those went down and they did come back up. So those 2 really have not seen big negative impacts. That's a different story than hotel occupancy, travel, and diners, which are the lines 3, 4, and 5 down there. And then you see that bottom line, the bottom line in the kind of light blue color, that's traveling through the TSA. So that's basically airline traffic. And that is down 70%. So that really has not come back at all. And some of that is the shutdown, but more so what we're seeing now is, even if there were not government regulations on the airlines, that there's just not really a willingness to travel due to people not wanting to catch COVID, as well as many events like weddings and vacations and business trips just being canceled. So the need for travel has actually been reduced. So what all of this economic activity has resulted in on the next slide is GDP growth, which is negative. So you might remember on this chart, everything above 0 is the economy growing, and everything below 0 is the economy contracting. And you can't really see it here, but the light blue shading in 2001, and there's light blue shading in 2008 into 9, which were recessions. Then if you go all the way to the right, again, there's light blue shading on those 2 negative bars. So what we're looking at on the right is first quarter GDP was down 5%. Second quarter GDP was down 31.5%. So we are technically in a recession now, if you use the definition of a recession, which is 2 consecutive quarters of a fall in GDP. So that would put us at a recession now. And obviously 34% is pretty severe. The estimates for third quarter are that we would have positive GDP of 35%. However, we would actually need GDP of over 50 to kind of go back to zero, right? Because if you're down by a third, you need to be up by 50% because you're off a lower base now. So even with what will probably be an improved third quarter, we will probably still be negative for the year. And estimates are maybe end of next year or sometime in 2022 that we could kind of get back to where we were in 2019 as far as the gross domestic product of the United States. And the impact this has had on the unemployment number, we can see on the next page. So you might remember if you look at that greenish line, we were down near 3% all the way over on the right at the end of last year. We are now at about 8% when we were as high as 14%. So again, very severe numbers. There's also about 4.5 million people who have left the job market. So if we add those in, we're probably closer to 10% unemployment. And if you look at the next slide, you can see payroll numbers. Oh, did I not? I don't think I didn't put the payroll numbers in there, but just to let you know, the payroll numbers were that we lost 22 million jobs and we gained about half back. But again, in places like hospitality and leisure and travel, we have not made back nearly as many gains as what we lost. But on this page here on inflation, this has been actually one of the kind of brighter spots, one of the places that has not really been hit by the pandemic. So again, there's two lines here. There's a blue line that you can see is more choppy. And then there is the gold line. The gold line are all consumer items. The blue line are all consumer items. The gold line, if we take out food and energy, it's less volatile. So those are really the numbers that the Federal Reserve is looking at to determine whether we have significant inflation. Either way, if you look at the blue line, you can see we're at about 1.3%. And if you look at the gold line, we're 1.7. So again, 2% is what the Fed is targeting. And here we are well below that. We are not expecting any inflation problems in 2020 or 2021. Perhaps after that, we may start to see inflation, but at least right now, that has not been a big problem. And then what the Fed did when we saw the shutdowns on the next slide and when we saw the market sell off is they drastically reduced the federal funds rate. So you might remember this is the rate that determines short-term borrowing as well as short-term savings, but it was really the borrowing side here that the Fed was targeting. So you can see there's three little stairs on the right. So that was in 2019. What the Fed was trying to do is have a soft landing. It looked like we might have a mild recession. Then at the beginning of this year, the Fed realized that they could not have us have a soft landing. So they drastically reduced the rate again, so that businesses could stay in business, so that we would not have a financial crisis and a banking crisis, that we could just keep it to a pandemic. And they were successful in that the banking system did not have issues like we had in 08 and 09, and we did not have liquidity issues like we did in 08 and 09. So this did work. And then if we look at the globe on the next slide, we can see here, there's two charts here. The one on the left, this is called the Global Purchasing Managers Index, and it is measuring the prevailing direction of economic trends across the globe in both manufacturing and services. And if you can see, there's a line across there. Everything above that line, which is above 50, is expansion, and below 50 is contraction. So you want to be above that line there. So you can see the big dip all the way on the right. So what we saw again at the beginning of the pandemic across the globe is we saw a severe contraction across all economies. The good news is, if you look real close over on the right, you see that circle, we are now above 50. So that's the good news, is that global economies are now expanding. Also, if you look over on the right, if you look at gross domestic product across the globe, again, over the last two bars are negative, -1.5% and -9.3, but not as severe as the US, still negative, but again, not nearly as bad. And that's because many of the Asian countries, specifically some of the larger economies like China, Taiwan, and Korea, they did not have to have such severe shutdowns. Their suppression of the virus was much faster than other parts of the world. So that has led some of the global economy to actually hold up a little bit better than the US economy. And then lastly, and here on the next slide, kind of going back to the US, I know one of the questions that we get a lot is, what is the election going to mean to the economy? What is the election going to mean to the stock market? And I think the good news is, if you look at these charts, the top one is the S&P and the bottom one is the GDP of the US. You notice the majority of the time, the market is up. The majority of the time, the economy is expanding. There are very few bars here below zero. So almost in all iterations, the economy and the market are actually growing. The election for the market is really not as big of a deal once the vote is complete, because once policy is set, the market will adjust to that. The effects wane over time. You know, in 2016, we saw a big sell-off when Trump won because everybody thought that Clinton was going to win. So it was a jolt to the market, and then the market adjusts to what's going on. So generally speaking, said that the market will only react to elections if they really think that there's going to be something substantially changed in the economy. So there might be some short-term volatility, which on the next page, I did put a chart in about volatility just to show you. It's not uncommon. If you look, October's highlighted here. The VIX index is an index of volatility. The higher the number, the more volatile. So you can see here, October is the most volatile month on average in the market anyway. And in an election year, that's not uncommon at all for that to happen. So the volatility that we're seeing, it feels extreme because of everything else going on, but it really kind of is just the normal October plus the election on top of it, and the fact that the election seems to be very polarized, right? We've lost kind of some of the middle, but again, and we are planning for this volatility. We're planning for this across all our portfolios. We're planning for this in your portfolio as well, and are quite comfortable that even if this were to spike and last, it could certainly last through November and December, that we are prepared for it. So I'll stop there for big picture. Are there any questions on big picture?
How do you plan a portfolio for volatility?
So good question. One of the good news things that happened was when we saw the sell-off from February 19th to March 23rd, which as we saw on the chart, we were down over 30%. The fixed income portion of your portfolio, which is just under 30%, which is the US Treasuries, US agencies, and high-grade corporates, that piece of the portfolio was actually up in that 5 weeks' time. So that hedge did work, and had we needed to raise cash, we would have had $475,000 that we could have accessed. That was actually up more at the end of that period than it was at the beginning. The other thing that we would like to do, and I know we're always asking you all, is making sure we really understand what the liquidity needs are. So knowing what the liquidity needs are so that if something is up, if we have a bond mature, we can go ahead and raise that cash and have it in the money market. The money market is the one asset does not fluctuate. So that's our asset of choice for when we know that you all have a liquidity need. But I think it was good news that piece held up.
And we do have not any planned unusual liquidity needs. So
Great.
we're in good shape.
Excellent. Any other questions on big picture? So we can move on. I think you have to go 2 pages ahead, Charlie, because there's there we go. So on this pie chart here, you can see the breakdown of the allocation. Right now, we have just over 30% in the blue piece of pie, and that blue piece is the large cap US stocks. We have just under 30 in the high quality US bonds, and that's that purplish color. That's the piece that I was speaking about holding up very well. Then we have just under 16% in diversifying equity funds. These are things like mid-cap, real estate, gold. 11% in diversifying bond funds, 9% in international equity, 2.5% in international fixed, and then about $20,000 or 1.5%, we'll call it, in the money market. So right now we are actually right on. If we look at the large target that we have set for you all, which is 55 equity, 45 fixed income. If you add these pieces, we are exactly right on that target right now. We did rebalance February 12th. So again, the market peak was February 19th. So we were selling stocks February 12th. So that was good news that we were about within a week of the high. And then we rebalanced again March 18th. And again, the low is March 23rd. So we were pretty close. And not that we try to market time at all, but what we do is we look, and when we are far enough out of range or out of our targets, then we rebalance. So our 2 targets for there were met, and we were pretty close to the high and the low. And then we did another rebalance just a couple weeks ago in September. And we may, again, depending on the volatility, I think we talk, we usually we target 2, we do 1 if things are moving in tandem, we do more if they're not. So we're at 3 this year. It wouldn't be out of the realm on a year like this to maybe do 4, but kind of we'll wait and see. Like I said, right now we're spot on. And I do think this allocation continues to make sense, again, because of that 29.5 holding up well. We also had the gold and the managed futures, which are in that diversifying funds. Those held up well in that period also. Any questions on the allocation? Hearing none, we can move on to the performance on the next slide. And if we look at the top row, we can see at the end of September, the market value in the portfolio that you might remember, this report is as of September 30th. Everything else is updated as of Tuesday, because we ran the reports yesterday, but this report only goes till September 30th because it's a once a month calculation. So you can see $1,567,000 at the end of September. The 3 months we were up 3%. For year to date, we're up 138. For the last 12 months, we're up just under 5. And then on an annualized basis for 3 years, 593. Annualized for 5 years, 6 3/4. And then annualized since you opened the account in March of 2013 at a little over 6. So I think the good news is, even with this real tough market, the annualized since inception of over 6, and for 5 years at 6 3/4 is more than we would target for this type of portfolio, where we'd be targeting more of a kind of a 5, 5.5, particularly with inflation low like it is. And then you can see fixed income across the board. That taxable fixed income up 575. That's the piece I was referring to that held up very well in the sell-off, that $475,000. And then you can see equity. We are still 3 months, the equities are up 4%. However, year to date, we are still down. If you look inception to date, up 868 for the equity portfolio. And then cash and equivalents, as we saw with the Federal Reserve keeping rates so low, we had started coming up to like the 1.5%, and now we're back down to 0.01. And then on the next page, we have it, the performance in dollar terms, which Mary can review.
This is our running tally since inception of how as Paula said in dollar terms, how the portfolio has performed. So you can see we started out in January of 2013 with the beginning market value of $1,224,252. This report runs through October 12th, and over that period of time, we have collected interest, dividends of $176,000, interest of $77,729. You have made additions into the portfolio over this time period of close to $57,000. We have taken out of the portfolio total distributions of $248,906, and the investment management fees totaling $81,122. So through our market value on October 12th of $1,603,977, you have an unrealized gain in the portfolio of just under $400,000. And just to note, I had looked, I know you're a fiscal year, but I still think on a calendar year basis, often, especially this year, I did look since January, even though I know the shorter term numbers aren't as strong as the longer term numbers, there's still an unrealized gain of almost $35,000 in the portfolio just on a year-to-date basis. At the bottom of the page, we just summarize a total return by looking at the dividends and interest we've earned in the portfolio of $253,733, plus the unrealized gain of just under $400,000, minus our fees of $81,122, giving you a total net return in the portfolio since inception of $571,766. Does anybody have any questions about any of those numbers on this page? Great. And then on the next page, I'll just go ahead to page 17. This is where we just do the summary of disbursements for the fiscal year for the library. So since warrant number 1 in August of 2019 through, actually we've included 2, sorry, I apologize for that. We've got 2 of the warrants from fiscal year 2021 in this report, but we've included that on the total as well. So this is slightly overstated by those last 2 amounts, giving you the total disbursements of $65,531. And Charlie, you already said you don't have anything unexpected coming up, so.
No, just usual cash flow, so no big draws.
Got it. Any questions on those pages?
So we could look at page 18 and see all of the individual holdings in the portfolio. At the top of the page is the money market, and as we talked about, that's about $20,617. Then the next section are the corporate bonds, the agency bonds, and the treasury bonds. Those continue on into page 19. And again, that was the piece of the portfolio that was certainly a good hedge against the market. The other fixed income assets in the portfolio, which start at the bottom of this page here, include some high yield funds, some floating rate funds, and then on the top of the next page, some reinsurance bonds, inflation bonds, and mortgage-backed securities. The inflation bonds actually, that's the TIAA graph that you can see at the kind of the third one down there. Now, those were up about 6.5%. The Stone Ridge reinsurance was up just about 6% this year, and the mortgage backs were up 3.5%. So those three, again, held up well as we would expect they would. The three on the prior page did not. They were more affected by what was going on in the equity markets. So we saw those were flattish, and then we saw the others up. So kind of a combination of what was going on with the fixed income diversifiers. Similarly, on page 20, if we look at the international fixed income, the developed international was up 4%, where the emerging markets was down 2%. So kind of a mixed bag there as well. At the second half of the page, we start looking at the individual stocks. And I can let you know that what we did when we knew that the market was going to be volatile in February and March is we went through each of our companies in the portfolio and said, first of all, are we at all affected by what we think are going to be businesses hardest hurt? Do we have airlines? Do we have cruises? Do we have hotels? We did not have any of those. And then we said, do we have any secondary companies? Do you have a tech company whose sole business is related to hotels or airlines? We didn't have any of those. We then went through every balance sheet to make sure that if there were something going on in the business, that the balance sheet was strong enough. And due to that analysis, we did make a couple of trades back in that time frame. One of the stocks we put into the account is under that material sector there. Scott's Miracle-Gro, you're probably all pretty familiar with that if you do any yard work. So they do lawn care products. They also have a division that has some cannabis seeds and other products. And we sold Martin Marietta. Martin Marietta was an aggregates company, and most of their revenue was dependent upon big construction projects, specifically projects that the government runs, the federal government. So we got a little concerned that if the federal government was plowing money into COVID, that they would not be able to maybe keep up the same expense level with other projects. So we sold Martin Marietta. Scott's Miracle-Gro, we had been wanting to buy it, and sometimes when you see a sell-off, we were able to buy it at 105. Now it's 163. So that was one that got sold off with everything else kind of for no reason, and we were able to get that in the portfolio. Similarly, in the industrial sector, we added 3M. That was something we had been wanting to add. 3M does produce a number of products that we are using for the personal protection, things like masks. We also have Otis now in the portfolio. Raytheon and United Technologies merged. We had United Technologies in the portfolio. UTX went away and they spun out in pieces. So the UTX airplane piece went with Raytheon, the engines. Otis, which is their elevators, stayed by itself, and Carrier, which is air conditioning, HVAC, stayed by itself. So we kept the Otis, we kept the Raytheon, sold the Carrier, got the UTX went away, and then we put the 3M in its place. So that was a configuration that also happened back in March. On the next page, in the discretionary sector, that was one of our other purchases, the fourth one down in that sector, which is TJX. TJX is the parent company of Marshalls, TJ Maxx, and Home Goods. Again, we were looking for a retailer that we thought might be Amazon-proof. TJX, they depend on people kind of touching and feeling and not online, so they don't really have to compete with the Amazon and the online kind of Walmart shopper. They have a lot of cash on the balance sheet. Everything they do is cash on delivery. And again, we were able to buy that at about $46, and it's now trading at $58. In the consumer staples sector, we didn't make any changes there. Walmart has been the best performer. They're up about 18% this year. They did hold up well. They were obviously one of the businesses that did not have to shut down, and they have been enhancing their online shopping for a number of years, so that paid off. Communications, we did not make any changes there. Alphabet and Facebook have been the two of the better performers. Energy, this sector has by far been the hardest hurt sector. This whole sector across the S&P is down by about 40% because what happened when we saw the sell-off is obviously when economy shut down, demand for oil went down. But at the same exact time, Russia and OPEC had a price war and flooded the market with oil, which caused a supply. So you had supply going up and demand going down, which is obviously the worst thing that can happen for a commodity. So we're still kind of digging out of that. Unfortunately, that was done, like I said, at the exact same time that we saw demand drop off. So energy has definitely been the hardest hit sector in the portfolio. We do, however, still believe that fossil fuels will be here for a while, and a number of these companies also have very big green pieces where they are trying to put a lot of research into non-fossil fuels. So we do believe that they still will have a place in our economy. Under financials, we did not make any changes there, nor did we in healthcare. Johnson & Johnson is one of the companies that has a test right now for the COVID vaccine. So that is one of the 11 companies right now that has that. In technology, we did not make any changes there, nor did we in utilities. Any questions on the individual stocks in the portfolio? At the bottom of this page, we have the managed futures, which might remember this, these are commodities and currencies, and this fund has the ability to go short. This had been a struggling asset for us, but we knew it was not correlated to the rest of the market. So the good news is, again, that was up about 5% during the sell-off. So at least we feel like that did its job in the down market. And then on the next page, we have the rest of the diversifiers. We continue to have some mid-cap, some real estate, some energy partnerships. The SPDR gold, that's been up about 23.5%. It's hard asset of gold, which again, not surprising. People turn to those types of assets when they're scared. And then on the international side, kind of a mixed bag with the international real estate down, the Fidelity up, and the Parametric down. And then as of the close of business on October 12th, you can see the market value was $1,603,000 of the portfolio. The next page is just showing you all of your bonds so that you can see what the maturity dates are of the individual bonds, and you can see their ratings. Everything is investment grade or better. And you'll notice that we have things maturing on a pretty regular basis. We have one bond maturing next year. We have 2 the year after, 4 or 5 the year after that. So as these bonds mature, if we need the liquidity, we will put the money in the money market and let it there. Otherwise, we will reinvest as appropriate. And the duration on this right now is 3.4 years. So the bonds are all pretty short. You'll notice we don't have bonds out into 2030 or 2035. And then the last few pages are all of the trades we've done. And we kind of talked big picture as we were going through the holdings about the rebalances and then the ins and outs when we were making name changes for things that we thought were better growth or better value in that time period. And that brings us up to the last page. Yeah, and again, there are more trades than normal because we did do the extra rebalancing when the market was volatile. Questions on the portfolio, why things are in there, kind of what we're doing?
Questions for Paula or Mary?
No, good job.
Okay, well, hearing no, oh, sorry, Chris, go ahead. You're muted.
Yeah, I know you alluded to the election, but you don't think anything from the outcome of the election is going to affect the portfolio either way?
Yeah, so again, definitely around the time of the election, and if there is not a decisive winner of the presidential election or of any of the Senate seats, if the Senate looks like it's close to going one way or another, then absolutely we would expect that there will be volatility in the market. But we don't think that any outcome means that there's long-term volatility, because generally, like I said, once the market knows what the policies are, the market can react. What's really troubling to the market is an unknown or something that should be known, kind of like 2016, which was, oh, we're going to have President Clinton, and then we didn't. We had President Trump. So that caused a lot of consternation, but then it evened itself out. So we would not be surprised to see it. And again, we feel like we have the portfolio position. If you were to have liquidity needs in that time, we could provide for them. And perhaps it will also give us other opportunities to buy things. If, you know, we have lists of things and we have metrics of things that we're looking at. So if things are down, then we'll take that opportunity to go ahead and buy some more stuff.
Great, thank you.
Any other questions? Okay, well, that's a good report. Is there anything that you would recommend for us or questions you have for us? I think we've answered your questions about liquidity needs. I think you've answered our perpetual question about whether our asset allocation should change. Anything that you think we should be doing?
Nope, not at all. Just
one question I would have, I guess, has to do with there is no alternative right now. Should we be thinking of a higher allocation on the equity side, since we can't seem to get much return elsewhere?
I wouldn't, just because I think the return that you need can be gotten by this allocation. So I think if you needed to have an 8% return in order to fulfill your needs and your mission, then I would say let's maybe look at some more volatility, but I don't think you need that volatility in order to fund the requirements that you're trying to fund. And if you did come upon a time where you had greater needs, we would actually have the stability in here to be able to provide for those, and we wouldn't have to worry about, oh, maybe this year you should only spend half of what you spent last year, which I think if we go any higher in allocation, we could come up against times where we don't want you to spend what it is that you're spending. Some years maybe it's double, versus I think now you have a nice steady stream of what you spend, and that this allocation provides for that steady stream at the run rate that you've been doing. I think if you said you wanted to boost the return, we absolutely could do that, but it just might mean, like I said, some years you might see yourself going below what you were at the beginning of the year, and I don't know if that would cause more consternation for you all.
Okay. Questions? Just then the phone rang.
An outside question?
Yes, it is. Hello, Mr. Trump. No, okay. Well, I'm sorry that we're not all together. It feels kind of sterile to be sitting here on Zoom, but that was a good report, and we appreciate the good work that you folks are doing. So we'll let you go, and if we have any unusual needs, we will be sure to be on the phone to you right away.
Awesome.
Great.
Thank you.
Do you know the
Thanks,
next
ladies.
meeting date, Charlie?
Sorry, say again?
Before we depart, do we know the next meeting date?
I would say right after the first of the year, probably January or February meeting, but we'll know more clearly in a little while.
Okay.
Thank you.
Great. Thank you.
Thanks for
Okay,
taking the time. Good to see everybody.
all right, good to see you
Bye.
too. So I think we'll move on to the next item on the agenda, which is approval of minutes. And if you have any questions on the minutes or corrections, please make them known now. Wave your hand or unmute and speak up. I do have one correction to make after I hear from you. Okay, everybody good?
Yep.
All right. So we were a little unclear about how we expressed at the September meeting what we wanted to do to fund the digitization process of the Sun Chronicle, which Carrie Sylvia is working on. And so I think I need to make, I know I need to make a correction on the description of that, which is at the end of the report on page 2 under new business. And of course, the one thing I didn't print out, I did send it to Tricia, but we need to change this to express it such that we clarify a couple of things. First of all, you may recall that Carrie was intending to use funds in the reference gifts account on our budget in order to get this project off the ground. Well, we went ahead and spent them on repairing and restoring the grandfather clock. Realistically, although I didn't know it at the time, makes sense to me, but maybe you didn't know either, but the reference funds should be spent for things that relate to reference. And this was not an appropriate use of that. And it also took away $1,750 that Carrie was planning on using. So we discussed that in September and we decided to replace that. Mahesh reported to us that we had a surplus at the end of fiscal year 2020, which would more than cover that. So we decided to, instead of charging reference gifts, we would charge that expense to contingencies and reserve. Our reserve went up by virtue of a surplus, so we had the money there to pay for it. We also decided that we would fund her request for about $2,500 in seed money to get the project rolling. And I believe what we did, and I'm quite sure of myself here, is that we decided we would take that out of the Marie Scherenza account, which has plenty of money in it, and we haven't spent any of it yet. We need to spend it on a project. And this was an appropriate use to take that $2,500 from the Scherenza account. We'll see this when we look at the budget in a couple of minutes. You'll see those line items. So I would like to have a motion. And Chris, do you happen to have that printed out, or can't hear you?
I can screen share the email. Does that work?
Yeah, that would work fine.
Okay.
So
I have it printed out if you want me to read it.
you want to read it instead? Okay, sure, go ahead.
Whatever. Okay. This is the correction. $1,750 has been expended for repairs and restoration of the grandfather clock and the expenses charged to account F reference gifts. This was contrary to the intended use of the reference gifts. Because we had a surplus at 2020 fiscal year end, the board agreed to charge the expense to account E3, contingencies and reserves. Further, the board agreed to make available $2,500 as seed money to begin the Sun Chronicle digitization project proposed by Carrie Sylvia. In the interest of utilizing funds which have accumulated in the Scherenza gift account, the board has agreed to change that account for the seed money, which is an appropriate use.
It should be charged, that account. That might be a typo.
Has agreed to charge, okay, agreed to, has been charged?
It has agreed to charge that account, is what it
The
should
board
say.
has agreed to charge that account for the seed money?
Yes.
Okay.
Does that make sense? Does anyone have any questions on it? I think that's a clarification of what we intended to do. If you think otherwise, please say so. All right, so I would like that motion to be on the floor. Would someone second it?
Second.
Is there any discussion? All in favor, please hold your hand up. Okay, thank you. So please make that correction in the September minutes, if you would, Tricia. Is that okay? All right, now, are there any other questions on the minutes? All right, now I've already forgotten the first thing I was supposed to do, and that is to vote by roll call. So all in favor of accepting the minutes with the correction noted, I will call your name. Please say aye. Please unmute and say aye. Beth Gould,
Aye.
Diane Mangiarotti,
Aye.
Judy Lusk,
Aye.
Eileen Strominski,
Aye.
Tricia Svensson,
Aye.
Linda Binns,
Aye.
Toby Reed.
Aye.
Okay, minutes are passed. Thank you. Let's see. Next thing is the treasurer's report. Mahesh is traveling and was hoping he might get here in time, but he did not. So you will see in your packet of papers, there is a warrant number 4. So please take a moment to look at that warrant and see if you have any questions. Is there anything that jumps off the page or requires an explanation? Okay, hearing none, I will call your attention also to $25 at the bottom of that warrant, which is money brought in that we need to accept in. So may I have a motion to accept warrant number 4 in the amount of $2,867 and receipt of $25 in various gifts?
So moved.
Second,
Second.
any discussion? All in favor, let's see, I will say Beth Gould,
Aye.
Diane Mangiarotti,
Aye.
Judy Lusk,
Aye.
Eileen Strominski,
Aye.
Toby Reed,
Aye.
Linda Binns,
Aye.
Tricia Svensson.
Aye.
Okay. Now you'll also see in your financials, there was also a budget produced for as of October 13th, which shows where we stand. You might notice on the bottom third of the page, it says gifts and gift expenditures related to the motion on the expenditures for digitization. The reference gifts are currently $2,041.38. There were $2,026 way back in February when I looked at the budget back then. So this shows that we have already made the accounting change to correct what we decided to do and when we reallocated the expense for the clock. Also looking further down in that block, you'll see, where is it? Where is it? Down in the lower third of that F block, you see Marie Sharenza Trust distribution. We've got about $7,300 in that line item, and we haven't spent any of that yet. We also have a chunk of Sharenza money sitting in the investment account at Rockland Trust. So no problems with charging that account for the digitization project. Any questions on the budget?
I have a question. What is that Julie Hall gift unrestricted for $139.10?
That was a gift that was made by Julie, just for instance. She intended it for a capital improvement type of project. At the time, we were contemplating redoing the children's room. We were talking, actually, we were in the process of hearing from architects getting ready to do that when everything came to a grinding halt. So it was kind of earmarked for that kind of a project.
Oh,
It's been there since Joan was here.
oh, okay.
We hadn't spent it.
Kind of weird, the amount. I thought that was a little strange.
Yeah, it is a strange amount. I agree. Any other questions? Okay. That does it for the treasurer's report. Let me find my agenda. Stand by. We go. Okay. Next, we have Chris with the director's report.
Yes, I did distribute it to everyone, and the meeting's kind of long tonight, so I won't go through it item by item. But basically, the building envelope project is moving forward. I guess the biggest news there is that the contractors are actually on site now and starting to get set up for actual work to begin. And assuming that the permits and all come through as expected from the city, they should be starting before the end of the month. For the tech lab, we did have a conference call, and I did actually send an attachment that's referenced in my report. As you may remember, even before we closed, we had started investigating E-rates, and then since we've been back in the building, we've been working with a company called Harbor Networks, who came out and just gave us some we thought they were going to be ballpark quotes, but they actually got pretty granular in the numbers that they gave us to both upgrade all of our cabling and replace all of our internet infrastructure. So we did have a Zoom call with Paul Kissman, who is with the Massachusetts Board of Library Commissioners and is kind of their tech outreach person. And I had him take a look at the I thought it was 2 quotes, but we actually had 3 quotes from Harbor Networks. So basically, the bottom line is if we go through the E-rate process and still proceed with a similar type of project to the one that we're thinking about, we could get a 60% discount based on the size of our city and the socioeconomic levels in our city. Basically, they use like the school lunch numbers. So for a project like this that could cost about over $33,000, our discount will be about $17,000. So it's pretty significant. So I know Charlie's going to speak a little bit later to SIPA, which is a requirement of this. So at this point, we're still doing fact finding. And the next step in that fact finding process is to put up a request for quotations via a Form 470 on the E-rates portal, which can be done basically at any time at this point, but quotes really can't be secured until the new year, the new calendar year of January. So we're going to be working the next few weeks on getting our 470 form up and loaded on the E-rates site to get some actual quotes where we could potentially proceed if the board decides that's the direction that we want to go. I did submit a grant application last week to the Massachusetts Office on Disabilities. They have an annual grant that comes out, and it was still available this year, even with all the issues with COVID, for upgrades to municipal buildings for accessibility. And as you might remember, we have some accessibility work that needs to be done as part of the overall building envelope project, because it's being bonded at such a great amount when compared to the actual value of our property. So that's a requirement of the state. So basically, the architect put together all the different items that were pointed out in the accessibility review that we had gotten back in the spring and attached numbers to those. So I'll be honest with you, this number is rather inflated, I think, but the number was $175,000. And I was advised by the owner's project manager, along with folks from the city that were in the meeting, to just apply for the full amount. So that's what I did. So we'll find out by December if we get this funding. And then if we do get the funding, it's a very fast timeline. So the work would need to be completed sort of in conjunction with the building envelope project, because it needs to be done by the end of June. The good news is the architect's already kind of done some of the legwork for us, and the city's already inclined to use our current general contract that we have on site for the building envelope project. So it would be pretty relatively easy for us to get it done. It's just basically seeing if we can get the money, and we may have an in, since I don't know how many other organizations are in a position right now to be doing, this type of repair work, whereas we kind of have to do it, and we're kind of in a sweet spot. So fingers crossed on that. Moving down, I mentioned at the last meeting, the city is allowing us to fill a front desk position, a 16-hour library assistant. And yesterday we did 3 interviews over Zoom, all external candidates. And we did select one of the 3 people. So now the city's personnel department will reach out to her, and once I know more, I will share that with you. Programs we have, in addition to the big read, which I'll get to, we have 2 virtual programs coming up at the end of October. We're hosting Sarah Hodge Weatherby. She did a big read program for us on anime, and it was very well attended, and she's a good speaker. And she's doing another one. This one's on Mysterious Massachusetts. It's sort of kind of a fun sort of Halloween program on October 29th. And on Election Day, Tuesday, November 3rd, which is a school holiday, I know it's almost like every day's a school holiday right now, the Children's Department is going to be hosting a virtual Fortnite gaming program. We've done some in-person gaming in the past using the same company, One Up Games, that has been popular. And thank you to the trustees, because you have basically helped to fund the APL writers' COVID-19 book, Shadows of Hope. If you'd like to have your own personal copy, it is available for sale at the front desk for $10. And a big read with all that's happening with COVID and virtual, I'd say, is going about as well as we could have hoped it would be going. I hope some of you were able to participate in last week's keynote. We did have about 375 people logged on, so I thought that was a very respectable number for that program. And if you didn't get to go and you'd still like to see it, it is available as a link from the grant website, Attleboro's 1abc.org, as well as from the bookstore's website. There's actually a program just ending right now that was happening at the Community DNA tonight with Dr. Guo. That one we had hoped to do a Facebook Live stream, but AACS had a last minute technical glitch, but they do promise us a recording for that. And this Saturday, I'll be honest with you, I'm not sure if we have any seats left, but we have another live program at the Attleboro Area Industrial Museum. Lisa Doucette, who's a local resident, a card holder of ours, is going to be doing a weaving demonstration. And that one we should be able to stream live on Facebook. And if you want to take a walk in the woods, or if you have young ones that you want to take out for a walk in the woods, all this week and running through the weekend, we're offering a virtual, we're calling it a Goddessy scavenger hunt at the Phil and Jenny Leach Preserve, which is operated by the Attleboro Land Trust. You just download a free app, and then you take a nice walk through the preserve, and you look for the different gods and goddesses that are in the book Circe. There's little signs that are in the ground, and there's little trivia questions that you ask as you take answer, I should say. We ask, you answer in the app. I did give you some statistics. We're doing fine as far as procedurally. In fact, we're getting a lot of compliments. A number of people in the community have said, yeah, I don't feel safe going other places, but I feel safe going in the library because you guys are so strict, because, no one enters that door. Whereas those of you who've come in, no, we do kind of have a 3-prong attack on people that come into the building. But I think especially for some of our seniors and other more vulnerable population, people with small children, they're happy with that. We really haven't gotten much pushback about people saying, oh, you guys are too strict. We've only been getting, wow, that's great. We appreciate it. We even had some volunteers that are now willing to come back and work in the building because they feel like we're doing the best that we can to, keep the building secure. But you can see, not that you didn't know, but I did want to give you just a comparison of July, August, and September circulation numbers of, what we did this year. And I think it's amazing that we did 19,000 in circulation. 2 of those months, literally us delivering them to people's cars. But when you compare a normal year, we would normally be closer to almost 60,000. So, obviously it's impacting numbers in the building. And Cheryl Boucher, yes,
Chris, I have a question.
yes.
It says 2020 and then 2021.
Oh, fiscal year. I'm sorry, I should clarify. Everything in the city is fiscal year. So 2020 is really last year. Yeah,
Okay.
I should have clarified fiscal year.
Okay.
Carol Waite has me so trained that I never the calendar year anymore, but that's fiscal year 2020
Okay.
and fiscal year 2021. Very good question. And even sales does it that way because that's how our state reports get submitted. So Cheryl, I had asked her, she does a lot of things for us in the library. One of the things she does is our periodical subscriptions, which are pretty much funded totally by the Library Trust. So there's three big players out there, EBSCO, W.G. Cox, and I actually forget the name of the third one right now. So we did get a competitive quote this year. She did a lot of legwork back and forth, and we did decide to move the subscriptions from EBSCO to W.G. Cox, and we're saving $448, which is a pretty significant savings for the 83 subscriptions that we have. And our friends, I just want to mention, have recently launched a newly refreshed website. So please take a look there and share it with your friends so that we can have more library friends. And that's my report in a nutshell, unless there's additional questions.
Chris, I have a question.
Sure.
The accessibility grant, you said they estimated $175 is what it's going to cost. How much is the grant for? Are you applying for the entire amount?
You apply for the entire amount because you can apply for up to $250,000.
Okay. So they could give it all to you or maybe just part of it?
Correct. And we do already have $19,000 from that community block development grant. That's kind of for a portion of this work. And a number of items that are listed in there are things that we've already kind of taken care of, like just lowering the paper towel holders, which our custodian has done. And now we have more touch-free dispensers and things. So we'll see, fingers crossed that we get some of it, all of it.
I have a question. Are we to assume that probably the dinner that's usually the conclusion of the big read is probably not to be?
Good question. I just actually got confirmation because literally during the meeting, I got the email. Rusty had been reaching out to Michaela over at the Culinary Arts program, because originally I thought they might be up and running and able to do a grab and go type of Greek thing, but they're just, basically, with the numbers going up in Attleboro, they're not going to be able to do it for us right now. So we're going to be doing some announcements tomorrow, just indicating that it's postponed indefinitely.
Okay.
We did get the Rotary grant, which we get every year to help fund it. So, there is some funding there for it, but it may be postponed till the spring or just roll over, hopefully, to next year's Big Read grant. So then we get the Big Read program again next year. But yeah, I know the ads were running because we had to commit to the ads back in mid-September, but we just got confirmation today that they're not going to do it.
The author interview was phenomenal. She was awesome. She was really, yeah. That's it.
I agree.
It was great that you could work with Unlikely Story. Too.
Yes, it was a big help to have them host.
Look how wide it went, 375 people.
That's because of our marketing, though, not because of
right,
theirs. Because they said that was their best event ever. Unlikely Story did.
We would hope there might be more collaboration then with them at some point. That's great.
Yeah.
Wow.
And they had the capabilities. We could have actually hosted up to 1,000, which, we could never have done with our software.
You're limited to 100, right?
Yes, we only have the 100 webinar for the library, so.
Good collaboration.
Yes, it was very helpful. Saved us a lot of money too on that upgrade, because even just to go up to 500, we would have had to pay a couple $100 just to Zoom, and it didn't seem really worth it for us to do that for one program.
Any more questions for Chris? Thanks. That was a good report, and you've pretty well covered the next couple of items on the agenda. The Technology Committee report, I think, is pretty well summarized in in her report, we really had a very good dialogue with the company Horizon that provided us with those quotes. Unfortunately, we have to go through the proper municipal bidding process, and so we have to put it out for bids and can't select who we want to go with without that process happening. And then the business on E-rate financing, we're going to talk about in a couple of minutes, but that could save us considerable funding. I think we have gotten a pretty good synopsis of the building envelope project. Are there any questions on either of those two items, technology or building envelope? Okay, well then let's go ahead to item 7, which we dealt with as a correction of the September minutes. That one has been settled. Item 8 has to do with SIPA, the Children's Internet Protection Act. And this deals with the issue of filtering the internet. It is necessary to do that in order to qualify for E-rate financing. We don't have to do it before the fact, but we have to do it within, I believe, within a year, and have expressed that we are planning to do it. There are a lot of variables as to how we can filter, and certainly there's a cost associated with doing that. It's not something that sales can switch on or off for us, I don't believe. So it's going to take a little bit of investment in some software if we are to go that route. But basically what we're doing is dealing with an issue of censorship, which we've been opposed to philosophically for as long as I know. The ALA is opposed to censorship of any kind. However, the ALA does recognize the fact that there is a benefit in being able to qualify for E-rate financing, which is a huge advantage to us in undertaking a project. So just a little review. This is kind of a haphazard review, but E-rate is a government grant program designed to handle just exactly what we're doing with the technology lab, internet connectivity and accessibility. And it's not that we get thrown into a pot and certain people are awarded a grant and certain people aren't. We're pretty certain to get what we ask for. And there are degrees to which we will get a discount or an award based on exactly what the technology is. Certain expenses that we might have are not qualifying expenses, but as Chris showed you in the attachment that she sent, this could save us a nice chunk of money, 17,000 out of a total cost of 33,000, excuse me. So it's about half of, it's a little more than half of what we would be planning to spend. In order to get it, we have to promise that we're going to have internet filtering. This is essentially, as you saw, if you read that report, this is a report we issued several years ago just to kind of give the lay of the land. It has to do with visual depictions. It has to do with pornography, essentially, obscene or pornographic images. And we have to filter those out. It does not address hate speech or pornographic literature. It's only images. It doesn't restrict social media. It doesn't restrict chat rooms. It can be shut off if an adult comes up and requests, would you please shut off the filtering on my computer while I'm working. So an adult can do that, a child cannot. That's kind of the lay of the land. So philosophically, in order for the project to go ahead as an E-rate funded project, we're going to have to agree that that's the route we're willing to go. what we don't have tonight, but we should have by our November meeting, I'm suggesting, is some input on the cost of what it would take for different programs that might provide this filtering service for us. But I think you've all had a chance to look this over. Are there any issues or questions that you'd like to bring up about it?
I just have one question. Chris, the report that we got that gave statistics on other libraries, that's kind of dated, isn't it? That was from 2014.
Yeah, it would be
Correct.
good to update that. That's right.
I mean,
But there's still a very few in Massachusetts that are filtering. But Boston Public is a major one that is.
that is not filtering.
No, is filtering.
Is filtering. I mean, they get you over a barrel. I mean,
Well, exactly. If you want to get the money, you have to filter. But it is, as Charlie mentioned, only filtering, pictorial pornography, stuff that if reference staff saw someone looking at anyway, they would likely say, this isn't really the place to be.
Has that
So looking at it.
Has that changed? Because I know that when we were in the schools and that issue came up, we had students that couldn't look up breast cancer because there were pictures of breasts.
Right.
And so that became an issue. But is that still the same?
It's the same thing because the city had to use E-rate financing to put in the internet infrastructure that they did several years back. And so they were willing to make that promise.
And one other question, how many people actually come to you and ask you to take the filter off?
Well, they have different ways that you can do it now. So you can make it so that adults can turn it on themselves. I mean, turn off the filter their own without coming to the desk to ask that question. And this also doesn't control anybody's personal devices. So, I mean, many years ago, the only way to get online was to use a library computer. But now we have a lot of folks that come in with their own laptops, with their own phones. So this does not block any of access in those ways.
And you're right, there are some ridiculous things that happen with filtering software. I remember sending an email to my wife, or it was from her to me during the workday when I was working at the bank. And it said, she is expected to arrive at such and such a time. Well, the S at the end of is and the EX at the beginning of expected said sex. And so this was the bank that whose filtering software blocked it. There are all kinds of examples like that of things that can go wrong, but some software is better than others and it's gotten more sophisticated over the years. So that is an issue. But
When do we decide on this?
well, I think that we need to submit an application for E-rate financing in the window, which runs from sometime in January through, I believe, into the end of February. Am I correct, Chris? I can't quite recall. But there's a window.
Yeah,
of
actually,
time for us
we could submit it now, but the ends usually closes the end of February. Although, like this year with COVID, they extended it. Maybe next year they'll extend it, but
So
by
if we were-
February.
Okay, so we're approved that if we are approved for such financing, we must have agreed to go this route before accepting the money. So that is the issue that we need to think about, and I would say we need to resolve it in the next month and a half.
Yeah.
When we first discussed this, I think most of us felt very negatively toward the whole thing. But I think in view of the cost savings and the fact that I thought it was actually more than just
Images.
the images. I thought it was more than that. So honestly, I don't know. It just doesn't quite seem so drastic at this point in time from, when we tackled this the first time. So that just a thought there. So.
That's how I feel.
If they can
Discuss this.
filter off.
What'd you say?
They can take the filter off.
Right.
Adults can take the filter off. So that's, and the fact that they don't have to approach an employee to say, I want the filter off. I mean, that's important too. I mean, that's almost like free reign. So.
And I believe the age is 17. I think I read that somewhere, that it's, so there could be, I mean, high school kids who would be able to use a computer without the filter. Because I think it was like, I remember reading 17 years old at some point in time.
That's a good question. I don't remember the answer to that.
Yeah, it was 17, I believe. I think less than 17. So maybe if you're 17 and up, but I know 17 was it seemed kind of a weird number, but I know that that's what I read.
This also applies to ALA grants, and I don't know where they stand right now. I know that this current administration was trying to defund the LSTA grants. I don't know whether they succeeded in doing that. I don't think so, but E-rate is applicable to those types of grants if we were to apply for something in the future, like we might for perhaps the children's room someday. So anyway, we don't need to make a decision tonight, but any questions, let's bring them out. And I think we should be prepared to have some input on software and related costs at the next meeting. Would that be doable, Chris?
I think so. I'll have to check with Carrie to see if we can get some numbers. But did Judy have a question? Or?
I didn't have a question. I was just glad to hear, Linda, your viewpoint, because when I read this, and I wasn't involved in it before, but when I read this, this wasn't disturbing to me. I thought, and things have changed. We've come a long way since 2001. So
I agree.
Yeah.
And talk about kids and stuff, they all have phones. And I mean, how many of them are really using computers in the library realistically when they have their own devices that they can do whatever they want with? So I don't really have a problem with this. I agree. When I read it, I wasn't too taken aback by it, really.
So we need to.
I feel that way too. Like Linda said years ago, it just seemed different. It seemed more invasive, and I don't know, but
They've also fine-tuned the software. So, I mean, I think before it used to block a lot more things, and now I think we have more control over what can come through, what can't come through, et cetera.
I remember we did have a discussion about filters and the fact that some were very rudimentary and some were very sophisticated. And so it depended what you chose as to how it would filter. And so it sounds like that's also something that's way better than it was.
And you get a choice on what filter to use, do you?
Yeah, we can choose whatever one we want as long as it meets the requirements of CIPA.
So I guess philosophically, it's important that we agree on this as of the next meeting as to what piece of software we might use. I think we have a little leeway there. We've got at least a year from date of application, I think, to implement. So we can fine tune that.
Is there a reference or a place that we can see information about the filters? Like what would you Google, or what would you, I mean, is it available online that we could kind of look at some of that stuff, or not so much?
It is, but to be honest with you, what we're going to do is we're going to start with Boston Public and then maybe hit some other bigger libraries around the country because they've done all the legwork. I mean, I'm not assuming, but they have big technology teams. So I would like to think that they've done a lot of the screening for us. I mean, we've asked, Dan from Harvard Networks to see what he can find out, but we figure if we take 4 or 5 different suggestions that come from those libraries, and then we can compare those are ones we know that already meet the standards and they're working in a library already and working for librarians. I think that's probably our best way to approach it versus, just starting from scratch.
Sounds like a good idea.
Yeah.
Okay, well, unless someone has another comment, let's wrap it up for tonight. We've had a long meeting, a lot to discuss. Our next meeting is November 11th at the appointed hour. Anything that anyone wants to bring up before we move to adjourn? Okay, would someone like to move that we adjourn?
I make a motion, we adjourn.
Second.
Second.
All in favor?
Aye.
Aye.
It's
Aye.
unanimous. Okay. So thank you all very much. Thanks for your patience. I know you all had a little homework to do tonight too, and thanks for doing that. So have a good month. I hope we'll run into each other somehow, at least virtually, and stay healthy.
Night.
Bye, everyone.
Good night, all.
At the library.
Meeting adjourned.